time for the 360 round. We're talking Onsemi after earnings. Let's bring in our panel. Angelo Zino is Senior Equity Analyst at CFRA Research, and Michael Robinson is Chief Technology Strategist at Weiss Ratings. Great to have you both here, Angelo and Michael. Michael, let's start with you. Shares of Onsemi higher today, up about 5% after this report. It was a top and bottom line beat. What stood out to you?
Well, it was a beat. They did beat forecast, which is awesome. But I just feel like this stock is way too choppy. This is the most, I mean, I'm looking at the chart right now and I'm getting dizzy looking at it. And so that just tells me neither the bulls nor the bears are in control. They've had 2 quarters in a row of negative earnings growth. That were down 27% in the most recent period just reported, and down the quarter before that 28%. And I like to see, earnings growth, particularly in this market and this economy. They do have a good portfolio of great products, but I just don't think they're performing all that well. And there are other things out there that I like a lot better. So I would not, today's report isn't a reason to sell, but it's not a reason to buy.
Okay. All right. And good point there. In terms of, if you take a look at the revenue numbers, Power Solutions Group down 23%, Analog and Mixed Signals Group down 16%, Intelligent Sensing Group sales fell 15%. So a beat, but important to put those numbers into perspective. So Angelo, similarly, you're sticking on the sidelines with your hold rating, $80 price target for Onsemi after earnings. So certainly not any more bullish following this report, but anything in particular stand out to you?
Yeah, so I mean, I think overall, in terms of a sentiment perspective, I agree with Michael. I'm kind of in a stance where, this is a company where they're kind of undergoing some pretty tough times right now in terms of some of the more cyclical markets. About kind of 79-80% of their revenue really tied to industrials and autos, which is okay because we do think you're going to, see some sort of cyclical trough here at some point here over the next kind of, let's call it 2 quarters or so, if you haven't seen it already. And you can kind of see how Texas Instruments reacted last week after they reported, and the stock kind of, picked up on a miss. But that said, you kind of look at the reason we're on the sidelines when it comes to this name specifically is because of their silicon carbide exposure. We're very concerned about that business generally, and the biggest reason for it is competitive pressures are increasing out there, specifically out in China. When you kind of look at the 2 biggest markets out there that silicon carbide kind of, caters to, it's essentially the EV market as well as the solar markets, 2 markets where, China has really kind of ramped up their kind of production on that side of things. So we think it's just natural. They're going to continue to get aggressive on the silicon carbide side of things, and that could potentially pressure, pricing in some of their contracts in the future. So we'd rather play names within kind of the auto, industrial, semiconductor markets that are not necessarily tied to that silicon carbide theme right now.
Okay, and I want to get both of your picks outside of, because it's certainly not Onsemi, in just a second. Angelo, sticking with you for just 1 second, though, because I think it's important to note, shares, of course, were under pressure heading into this report, still down about 11% year to date. The CEO on the earnings call did talk about power demand continuing to rise and talked about gaining market share in automotive, industrial, and AI data center. How does AI play into an Onsemi? Certainly hasn't been a positive catalyst at this point. Do you expect it to be in the future?
Listen, I think it's an important market for them, like it is for kind of, other chip makers out there. They're not as exposed to kind of the AI theme out there as, other semiconductor names out there. So it is kind of an important kind of potential growth catalyst out there for the company. But again, it's not something that necessarily is going to, lead to some sort of kind of massive upside revision in terms of kind of the growth expectations out there. I earlier kind of alluded to the fact about 80% of their revenue tied to autos, industrials. So in order to really kind of see a nice recovery within their business, a nice cyclical upturn in 2025 and into 2026, it's going to be more dependent on the fact that, you kind of see some greater momentum on those type of end markets out there. And listen, the visibility specifically on the industrial side of things is very, very tough. You're talking about thousands of customers out there. It's very fragmented in nature, unlike other markets, to your point, like cloud or wireless, where you kind of have a couple of big players out there. This is it's a lot more difficult to kind of call bottoms in areas like industrials out there. But that said, yeah, it's an opportunity for the company. It's just not as massive as, other plays out there within the semi space.
Okay, so Michael, going back to you, the chart is way too toppy for Onsemi for you to be a buyer. What do you like better than Onsemi that you'd be comfortable putting money to work in right now?
Couple of names. I don't think you can go wrong in the long haul with ARM Holdings. If there's no ARM Holdings, there's no global tech economy, right? There, and 70% of the world's population is using some form of ARM-based processor. They're a big part of the mobile wave, and this continue to go on right now. They've shipped 287 billion chips so far to date. So I don't think you can go wrong with Broadcom for the long haul. And another play that I like, and it's in this AI era, I think it's also going to do very well. Another company that can benefit from the AI inflection point that we've seen the last several quarters would be AVGO, Broadcom, AVGO is the symbol. Big play on high-speed data processing. Their things are so fast, it's almost incomprehensible to the human being how fast the stuff moves. And that's really going to solve a major bottleneck for the AI segment, which is a pervasive. I mean, it's going to be all through the global tech ecosystem AI. So you need these really high-speed interconnects and other things that Broadcom makes. So without that, you're not going to have the kinds of speeds that you need. And so they're a good play on a radio frequency, system on chips, and things like that. So one quick name, if I could say, Arista Networks. Really a great play on AI, good hardware company. They're doubling their earnings every 2.5 years, which is phenomenal. And again, they are a great play on the inflection point in AI because those AI data centers, as I just said, really need high speed transmission because they're just an avalanche of data related to what's going on there with large language models and so forth.
Okay, and in very different charts, ARM's up over 100% year to date. Broadcom's up 54%, and then Arista Network is up about 67%. So, Angelo, we only have about 30 seconds left, but want to hear your top picks in this space as well.
Yeah, so I guess I'll go real quick. So if you're kind of looking for more on the auto industrial kind of cyclical play out there, our favorite name there is NXP Semiconductors, tickers NXPI. They don't have that silicon carbide exposure. They're also a European play out there, so they don't have some of the regulatory concerns that you could potentially see coming from the U.S. But the other names that we like, Marvell is strong buy recommendation, like their AI as well as kind of non-cyclical upturn. And then NVIDIA and Broadcom, I think, are still great plays out there.
Okay, and NVIDIA actually down today, Angelo, down about less than 1%. You'd buy this dip?
We would. I mean, clearly you could wait for a little bit more of a dip given the run they've had right now, but kind of ahead of earnings season, next month, we do expect that to be a catalyst, given the fact that Blackwell will start to finally launch, and we do think there's kind of upward momentum to estimates from that ramp.
Okay, we'll leave it there. Angelo, Zino, CFRA Research, and Michael Robinson, Weiss Ratings. Appreciate your picks. Appreciate your insights. Thanks so much.